Hi, this is Alan Mandel at HTDT Gold, 75 Wall Street in New York, with my Gold Journal report for December 14th, 2013. What I'd like to do is start out by going over with you the various price projections, price forecasts for gold from the major banks. They're all very consistent, actually, and it's like they sat around the table sipping tea and agreeing on what the price of gold would be in 2014. They project basically $1,000 to $1,200 as an average price, which is a bit lower than the $1,230 price that's presently being quoted. I must add that the gold price is very volatile lately as movement takes place out of funds, out of the ETFs like the GLD, and over to Asia, over to China. China's very happy to pick up gold at lower prices, as you should be too. I think that the price of gold will go up in 2014, and I'm not alone. Commerzbank, Germany's Commerzbank, thinks so too. But the banks that feel gold will be $1,000 to $1,200 an ounce include Bank of America Merrill Lynch, CIBC, Citi, Goldman Sachs, and UBS. Standard Chartered also feels lower gold prices as well. What's significant is that the Europeans feel differently, and I'd like to read to you a little bit from Commerzbank's forecast. The German bank expects gold will shake off its current weakness and is predicting prices to end 2014 at $1,400 an ounce. It says investment demand should revive gradually along with continued robust demand from Asia. They expect the trend of gold moving out of the West and to the East to continue as China is absorbing the gold coming out of the exchange-traded funds. Indian demand in 2014 should be similar to 2013, and even though India's government sought to temper demand, record premiums show demand is still strong. So India and China, demand up, price up, and again, China is happy to pick up gold at discounted prices. You should too. It's the ultimate value of wealth and nobody else's debt. I'd also like to turn right now to the S&P forecast for significant slower growth in the U.S., and it hasn't gained much attention. The headline on a CNBC.com article on their website is that S&P downgrades U.S. growth forecast significantly. The credit ratings agency has lowered its U.S. growth forecast and warns of significant downside risks from federal funding cuts and for other reasons. Now, this is significant because it means that any tapering that the Fed might do next week at its meeting is only going to be in response to market expectations. They don't want to disappoint the market. The stock market, as I predicted, is quite volatile lately and probably headed down after this Santa Claus period is over. The market going down during a Santa Claus period is very significant. Usually there's a Santa Claus rally, but it's not happening this year. So the tapering will be very modest if it occurs at all. There's weak growth in Europe. Industrial output is down. And Japan today issued more stimulus, which means that money printing is going to continue for the foreseeable future. Economies are weak all over, and it's going to stimulate inflation. So my prediction for slow growth, high inflation, and high unemployment is going to look like it's taking place. Just today, unemployment claims in the United States shot up. Unemployment claims shot up 60,000, which is very significant. Watch the 400,000 claim level moving average. If it gets there, that's the boundary line between growth and contraction in the labor force. It's 326,000 now, and it's been moving up. The last thing I want to mention is an international event in China. China has established an air defense identification zone which the U.S. breached 2 weeks ago What do they want to do? Start World War III? Japan and South Korea held military exercises in that area today, and we have to watch that for a possible outside event. It could be very disastrous for the stock and bond markets and very bullish for gold. Well, that's all I have time for today. This is Alan Mandel, HTDT in New York. Thanks for watching.